Hello, everyone. Give everyone a chance to join in. Hello, hello. Alrighty, well, to be aware of everyone's time, I'm going to go ahead and get started today. Welcome and thank you for joining us. I am Chloe Wilson, Growth Marketing Manager here at Crestwood Associates, and I'm excited to be co-hosting this session with Jody from Greenshades. Today's webinar is designed to give you practical insights and tools as you prepare for year end. We'll walk through key strategies, highlight best practices, and leave you with resources you can put to work right away. Before we get started, just a few housekeeping notes. Let's see. First, everyone's microphone will be muted so we can minimize the background noise. And then second, while cameras are off during this presentation, we do encourage you to engage in the chat and polls that will be sent throughout the webinar. We'll have time at the end to answer any questions anyone has, while I will also be in the chat throughout the webinar answering any questions as well. And finally, don't worry about taking notes. We are recording today's sessions and a copy of the recording will be sent to you after. For those of you who may not know Crestwood, I want to take a moment to share what drives us as a company. At Crestwood, our values guide everything we do, whether we're supporting clients, building solutions, or partnering with organizations like Greenshades. We believe in working smart, which means always leading with integrity and accountability. We believe in having fun, staying curious, continuously learning, and collaborating to make the process lighter for our teams and yours. And we believe in delivering results, exceeding expectations with precision and excellence. These values are at the heart of how we serve our clients, and they shape the way we show up for you. Let's go to the next slide. Perfect. Your perspective matters to us, and we've created a quick survey to learn how we can support you even better moving forward. It only takes a few minutes to complete, and as a thank you, your team will be entered to win a pizza party on us, which we'll be announcing live during our upcoming client-exclusive roundtable on September 10th. You can go ahead and scan the QR code on the screen to complete the survey based on the ERP your team currently uses. I'll pause for a moment to give you a second to maybe scan that QR code, and I will be sending the QR code in the follow-up email, so you will have that as well. Let's give everyone maybe a moment or two. Alrighty, well, thank you for taking a moment to give us feedback if you do have a chance. If not, like I said, the QR code will be sent in the email post-webinar. Now I'm going to hand it over to Jody, who will walk us through today's agenda and get us started with the main content for the webinar.
Hey everyone, and welcome. Appreciate you carving time out of your day. My name is Jody Thibodeau. I am an account executive here at Greenshades. Excited to be with you here with you, and of course, thank you to Chloe and our partners at Crestwood Associates for hosting today's session. We know that Q4 can sneak up quickly, and with all of the 2025 changes already in motion, now is the time to make sure that your systems and processes are aligned. Over the next hour, we're going to walk through the biggest compliance changes that may impact your Q4 planning, some key areas to review in your current setup, and we'll show how Greenshades can support in-house payroll, HR, and taxes for your teams using Dynamics without requiring outsourcing or disconnected tools. Please keep in mind that many of these regulations are still a bit fluid and guidance has not yet been given. And although Greenshades started out as a tax compliance product, and we have a team of tax experts, I myself am not a tax expert. So I'll be keeping things pretty high level. If you have questions, I encourage you to put them in the chat box. We can get with those experts if they're beyond my scope and circle back around with you to get the answers that you're looking for. So let's dive in. Lots of changes going on in 2025. Many of them have brought huge shifts. Some were expected, others a little bit more complex. Many of them are retroactive. We've seen updates to federal and state tax thresholds, expanding paid leave laws at the state and local levels, and a big push from the IRS on ACA enforcement, especially around reporting deadlines. There are many implications, new implications on how we'll handle overtime, tipped wages, and dependent care deductions. And to add to higher penalties on noncompliance, the margin for error is getting smaller. So today we show you how you can stay ahead of those changes before the year-end busy season kicks in. So Chloe, I'm going to lob it over to you for our first poll.
Perfect. So I went ahead and I launched our first poll. You should see that popping up on your screen. So the question we're going to ask is, which compliance area has been the most challenging for your organization in 2025? Payroll tax changes, leave management and PTO, ACA and benefits reporting, keeping up keeping systems updated. And then if you're not sure, feel free to click you're not sure. And then also we have an all of the above. So feel free, leave us your responses. I will be in the chat looking at those. It looks like we have a few responses in. So payroll tax changes is one of them. We have a few responses for leave management and PTO, and then also keeping systems updated. So they're all at about an equal percentage right now, Jody. It
Wow,
actually looks like they just changed. 40% said payroll tax changes.
not surprising for sure. So, okay. Well, thank you. So let's jump in. Some federal level updates. March of 2025, President Trump issued an executive order, overriding previous executive orders impacting multiple areas. For instance, federal contractor minimum wage reverted from $17.75 an hour back to $13.30 an hour. Employers with contractors should audit these wage levels and what applies, especially if you are in mid-contract with some of those. Additionally, the Social Security wage base rose to 176,100 this year. So be aware that if your system wasn't updated, you are under withholding. And need to take a look at that. Wage-based estimations for 2026 are 181,800. For taxpayers age 65 or older, there will be an adjustment of up to $6,000 to gross income. This adjustment will be reduced by 6% for modified adjusted gross income exceeding 75K for singles, or for 150 for those joint returns. This starts with tax year 2025. This adjustment, like others that you'll see, are temporary with a planned end date of end of year 2028. So consequently, now is the time to review and update your payroll tax tables for 2025. Also encourage your employees to review their W-4s, especially seniors, head of household, or married filing single. Now for state considerations. Nearly every state made some kind of tax adjustment this year. Some made changes to payroll taxes, while others made adjustments to corporate taxes, taxes on retirement, or other items that may impact either individual or business taxpayers. States that lowered income tax include Indiana, Iowa, Louisiana, Mississippi, Missouri, Nebraska, New Mexico, North Carolina, and West Virginia, among others. So employers must update withholding calculations and, in some cases, distribute new forms. Other changes include Alabama, which ended its exemption on overtime on June 30th. Vermont started a mandatory retirement system, and the employees must now opt out if they're not interested. So this wave of reforms increases net pay in many states, which is great for employees, but it does create payroll complexity, especially in multi-state organizations. And I encourage you not to take it for granted that if these updates are impacting you and your state, don't take for granted that your ERP system is going to address that particular change. The Alabama exemption is a good example of this. The Alabama overtime exemption actually went into effect January 2024. Microsoft announced at that time that they would not be making changes in the program to address this exemption. And they recommended either workarounds or calling Greenshades. So if any of these changes are impacting you or your state, I would encourage you to validate that those changes will be addressed in product, and don't just assume. One of the biggest payroll related change is going to be tip income. Key points in these deductions are that there are $25,000 in deduction limit. The deduction begins to decrease when the modified AGI reaches 150K for a single filer or 300 for joint returns. It is available for both itemizers and non-itemizers, and it is retroactively effective from January 1 of 2025 and goes through December 31st of 2028. Since it is retroactive, the transition rule is that for those cash tips reported before January 1, 2026, so any in 2025, employers can estimate tips using any reasonable method specified by the secretary. This is applicable to traditional tipped industries, including the beauty service sector. The Treasury and IRS have not yet issued guidance, but will, and this will include a list of occupations that commonly and regularly do receive tips. Regarding reporting, employers and other payers must file information returns with the IRS or SSA and furnish statements to taxpayers showing cash tips received and the occupation of the tip recipient. So what do we do to prepare for this? First, ensure that your systems can accurately isolate the reported tip income on the W-2 form. Next, focus on educating your employees about how this deduction works. It's essential that they understand the impact on their tax situation, especially in roles like the beauty services industry and hospitality. And finally, keep an eye out for those IRS guidance alerts. So you're going to want to understand using the reasonable method for this retroactive tip reporting. All of these steps, of course, are going to help ensure that you stay informed and that you're ready for any of the changes. Another big payroll change is the overtime deduction at the federal level. As mentioned, Alabama just tested a version of this at the state level, but it expired on July 1st, and the One Big Beautiful Bill, or OBBA, sets a federal level overtime deduction that all employees can leverage. And what this bill states is that effective for 2025 through 2028, individuals who receive qualified overtime compensation may deduct the pay that exceeds their regular pay or their regular rate of pay. So that is really the kind of half portion of the time and a half compensation that's required by the Fair Labor Standards Act. This is limited to $12,500 in deduction or $25,000 for joint filers. Overtime is to be reported separately on a W-2. The deduction available for non-itemizers, and it is retroactively effective from January 1, 2025 through that December 31st, 2028. Transition rule here, like with the tip income, is that for overtime reported before January 1st, 2026, so all of 2025, employers again may approximate qualifying overtime by any reasonable method specified by the secretary. And guidance will be provided by the Treasury and the IRS. But in preparation for this, it's crucial to separate and label your qualified overtime hours in your payroll system for accurate reporting. Even though we don't have full clarity on how this will be reported, we want to be able to get everything in order so that we're ready for whatever comes. And again, monitor for any IRS updates regarding this approximation methods for your overtime deductions, especially if they pertain to 2025 and 2026. Regulations can evolve, so you want to stay informed and on top of things so that you can adapt quickly. Also consider updating the configurations in your payroll system to retroactively report if necessary. This ensures that any past overtime can be reported accurately and in line with these new guidelines. And finally, again, educate your employees on how these overtime deductions might impact their tax returns. This proactive communication, of course, is going to prevent misunderstandings and empower them, give them the knowledge that they need. Some other changes, child tax credit. The credit has been increased from $2,000 to $2,200 per child, with $1,400 remaining refundable. This change impacts employees' annual tax liability, and it's advisable for teams to promote the W-4 reviews during open enrollment or onboarding, particularly if they have families or dependents. The child dependent care tax is now fully refundable up to 50% of care expenses, up to $8,000 for one dependent or $16,000 for two or more dependents. And employees really need to adjust their tax withholding or lower their DCAP contributions if the dependent care provides greater benefits for them at this point. So it is essential to communicate the relationship between these two tax credits during benefit enrollment so that the employees really understand the impact. And finally, the SALT deduction has been increased to $40K. So again, we encourage employees to reassess their W-4s, just wanting to ensure that the tax withholding aligns with the new credits and helping them avoid any surprises in tax season. It is also important to flag that bike commuting benefits are now taxable. This change might be a surprise to some. So if you are in a commuter area, you will want to communicate this out to your employees. So finally, to ensure that all these benefits are accurately included in the tax benefit and W-2 form, this step is vital to maintain compliance and accuracy in your employee tax documents. Payroll teams should also be aware that retirement and FSA limits have increased this year. 401k deferral limits are now $23,500. Employees age 60 to 63 get a catch up of $11,250. So that's a total for them of $34,750. Health FSAs now cap at $3,300, and the commuter benefits went up to $325 a month. These updates support employee savings and wellness, but systems communications must reflect them accurately. And at the federal level in January, the DOL issued an opinion letter. Key takeaways in this were that if an employee is receiving state family leave pay while on federal FMLA, the employer cannot force them to also use accrued PTO. That time is considered paid, so FMLA does not qualify as unpaid leave in that case. State level compliance is also evolving rapidly. Connecticut overhauled its paid leave law effective January 1, expanding employer coverage and reasons for use and eliminating exemptions. Michigan's Earned Sick Time Act changed in February, now includes all employers with new accrual and cap rules. Alaska and Missouri will implement their own paid sick leave laws later this quarter. And meanwhile, Delaware Maine, and Maryland began collecting payroll contributions for paid family and medical leave this year. And in both states, the payroll contributions began January 2025. And in January 2026, employees can start taking paid leave from the contributions from that first year of the program. Employers operating in multi-states must track the differences in accruals, usage, carryovers, documentation, and notice requirements. So it's going to be complex. So big changes this year under ACA compliance. You're no longer required to mail 1095-Cs. As long as you provide employees with notice that a copy is available upon request, then you do not need to distribute them to all the employees. Employers need only to post the notice of availability upon request to not have to issue them to all employees. If you receive a 226J penalty letter, you now have 90 days to respond instead of 30. And there's now a 6-year limit on the Employer Reporting Improvement Act. It has established a 6-year statute of limitations for ACA penalties and assessments, effective for returns due after December 31st, 2024. This period begins on the later of the due date for the specific form filing or the actual filing date. So we're just going to make sure that y'all are still asleep after all that. And Chloe, I'm going to lob it over to you for another poll question.
Perfect. Alrighty, let me go ahead and launch this poll. Okay, so the next question we're gonna ask, I think it's up, perfect. How confident are you that your team is ready for the latest rounds of payroll/HR regulations? The first answer is very confident. We're in good shape. Shout out to everyone who's very confident. Somewhat confident. A few areas need attention. Not confident. We're behind or unsure. And then some of us may just be not sure. So feel free to respond with how confident you feel you are for the latest rounds of HR and payroll regulations. And then let's see what some of the responses are. Alrighty, let's see. It looks like everyone responded, and it looks like 86% of people say they're somewhat confident, but there are a few areas that need attention.
Very understandable. So, okay, well then let's jump back in. So we've talked about a lot of changes that are going on this year. So let's kind of take a pause and look at why this feels kind of challenging for so many payroll and HR teams. Most teams that we work with are dealing with systems that don't talk to each other, with manual processes to update tax rules or PTO requirements or policies, ACA reporting that might be siloed, reactive, or done after the fact. And there's a reliance on outsourced providers to that have maybe limited visibility or flexibility. When everything's disconnected, of course, year-end becomes a scramble, and compliance becomes reactive as opposed to proactive. So how do we resolve that, and what should we do? We say this every year, and we'll keep saying it. Year-end success starts long before December. The biggest mistakes we see happen are when businesses rush at the last minute to fix problems that really could have been avoided months ago. So first, at year end, your W-2s need to match up with your 941s. The cumulative amounts for the 941 need to equal the W-2s. So the federal taxable wage, box 1, federal income tax withheld, box 2, Social Security taxable wage, box 3, Social Security tips, box 7, and then Medicare wages and tips, box 5. If they don't match, the IRS will flag discrepancies, leading to potential penalties, delays, all of those types of things. So the best way to avoid a year-end nightmare is to reconcile as you go. Follow these general guidelines to limit the chaos. So each quarter, compare your 941 filings against your payroll records. Catch and correct the errors early. Don't let them pile up. If something looks off, investigate it immediately. Identity verification is crucial, yet often overlooked step in the year-end process. These verifications typically take about 3 days or so to process through the IRS and SSA. To avoid those delays, businesses should consider verifying identities throughout the year rather than waiting until year end. Regularly verifying employee and vendor details really help prevent last minute issues. Ensuring accuracies of those social security numbers and TINs reduces the risk of rejecting forms and compliance penalties. So using verification services throughout the year really kind of streamlines that year-end processes and minimizes any disruptions that you may experience. Timing is everything when it comes to forms. When you're handling them yourself and working with a provider like Greenshades, getting ahead of the rush makes a huge difference. Take steps such as order your forms early, as last minute rush orders can lead to unnecessary stress waiting for them. Submitting print and mail requests early is going to lock in better pricing for you. Holding off on IRS submissions for 1 to 2 weeks after sharing those forms with your employees. This gives time for corrections. If anybody comes back to you, then you can correct all of those things before you actually file them. The earlier you act, of course, the more control you have over cost, compliance, etc. And nobody enjoys a last minute scramble at year end. Greenshades is here to help with tools, expertise, and resources really designed to make your year-end process as smooth as possible. And I think many of you probably are very familiar with us for year-end forms. Also, you might want to start thinking about if your payroll system is ready for what's coming ahead. OBBA was signed in July and it impacts a lot of things, and the impact was immediate. Some of the questions that will determine whether your current system is ready for what's ahead is, can you separate and report tip and overtime income? Can you track jurisdictional specific deductions and credits? Are the system updates in place for new thresholds, brackets, 1099s, deductions, etc.? Can your benefits module support DCAP, leave, childcare, credit tracking? And is your team confident in responding to retroactive rule changes? A lot to think about. So your system needs to align before year-end prep. So think about reviewing leave policies for accuracy and compliance, all of your PTO, FMLA, state mandates, all of that, and validate that your payroll settings are there to confirm the 2025 tax and benefit limits and that they're correct. Notify all your employees. I keep saying this, but communicate with your employees about benefit limit changes and any kind of paycheck impacts. Reinforce those policies on remote work, timekeeping, and I-9 requirements. And then obviously finalize ACA workflows and templates ahead of year-end reporting. And then begin your year-end filing prep. Don't wait for December to spot issues. Get started early. So, as many of you know us, through working with us, but for some of you, you may not be as familiar with us. So who is Greenshades? We are a trusted provider of payroll, HR, and tax solution for mid-sized U.S. businesses. We have over 22 years experience, and we started providing tax compliance products and then HR products that integrated and ran alongside of the Dynamics GP platform. We later expanded the offerings. And so now we are a full service, I really say hire to retire human capital management system. So now we provide a comprehensive cloud-based platform that integrates seamlessly with a growing list of ERPs, of course, with the Dynamics products, as well as Acumatica. We currently support over 4,000 clients across the US, managing payroll and HR for more than 2 million employees. Their ERP, we are technically ERP agnostic, but we do have those best of class integrations. And so our integrations, I've worked in this industry for a while and worked with outsourced payroll companies. Those tend to be a 180 integration, and our integrations are 360 degrees. So it really makes for a nice flow of information with your financial system to make sure that all of your information is up to date, and that you are making decisions from a good place with all the good information. So we do, while we are somewhat horizontal in nature, we do serve a range of businesses and industries, staffing, healthcare, transportation, et cetera. With that strong tax compliance expertise, we're particularly well suited for companies dealing with complex payroll and tax scenarios, as well as multi-location, multi-jurisdictional type of operations. As I said, kind of hire to retire. So this particular slide is going to show you kind of the full scope of our products. It is an all-in-one solution. So with data, and functionality working seamlessly together alongside of that ERP. We do have packages that give you the complete solution, as well as HR and tax standalone products. How is Greenshades different than other providers? With Greenshades, clients maintain full ownership of their employee data and control over their software usage. There's no need for outsourced third-party interference or anything like that. You run payroll whenever you want. You don't have any operational controls or deadlines on you. And you don't have any barriers as far as updating your GL tables. And this is one of the things I talk about a lot, in that when you think about the 180 integration that I mentioned before, that is just pushing GL data out, so that when it comes time, if you have any changes in your GL, with most solutions, you have to submit that to the organization. They make the changes on your behalf. All of that stuff is kind of behind the curtain, if you will. With our product, you have full control, and like I said, with your software usage and your data. So you have the ability to go in and make changes in the GL, or with that 360-degree integration, if you make a change in, say, GP or BC, then that sinks back down into your Greenshades. And so it really kind of hits the easy button on things like that. We also are tailored to the specific payroll needs of any particular organization. So, unlimited payroll runs. You can even have multiple work environments if you are a multi-EIN organization. You can easily run off-cycle payrolls. So really, it's all designed to fit the client's schedules and needs and preferences at no additional cost. Plus, I always love talking about this, full control over your banking and cash flow. So there is no required float. Outsourced payroll companies, when you hit submit on a payroll, they reach into your account and they take out 3 impounds. One that's going to be direct deposit, one that's going to be for your taxes, and one that is going to be for their fees. Many of you have had full control over your cash flow because you've been working potentially in GP, and so you have control over that. You kind of give that up when you go to an outsourced payroll company because, like I said, they're going to reach in and they're going to grab that money. In our solution, it is an in-house solution. So much like you're accustomed to operating, you maintain those financial controls. And so when you hit submit in our payroll system, we create the ACH file so that you can send it over to your bank. So that's why there are no operational deadlines. We don't impound funds, so you maintain all those controls. What I love too is that you also get to choose your bank. And so I never thought that much about that, but one of the organizations that I worked for was using Silicon Valley Bank for their direct deposits. So when SVB collapsed, it was a Friday, which was a payday. And so a lot of people didn't get paid. Millions were locked up in that. So it's kind of nice to keep those controls. So the transition to cloud-based platforms and the adoption of advanced payroll solutions really are pivotal, considering all of the changes that are going on in the growing demand. Making that switch to be more agile and comprehensive with a solution like Greenshades is not only going to benefit and keep you in compliance, but it just modernizes and streamlines your processes as well. So we find a lot of people save a lot of time. In that transition, of course, payroll is a key piece of your migration from GP. You need a payroll system that can work with your current GP system and one that can also work with your future system so that you can kind of transition easily. We have some organizations that go for the big bang approach, as we call it, when you try to migrate all of these solutions all at once. This approach can kind of create some stresses because you're trying to do a lot of things all at once. So where we've seen the most success is to consider doing a payroll first migration. So kind of peel out payroll from that picture and take it in digestible pieces. Or migrate your payroll, get it stabilized. It is absolutely a crucial part of your operations, and you can't not have it. So get that done, get it stabilized, and then you can take a deep breath and kind of move on to the larger picture and the ERP move. And the nice thing is because we integrate with all of those Dynamics products, then we can integrate you with your GP until you go live on your next ERP system. Once you move into that next ERP system and you go live, then we can go ahead and just move that integration over. So easy peasy. Okay, Chloe, one more poll session or one more poll question, excuse me.
Perfect. Okay, I'm gonna go ahead and launch this poll question. So directly, what is your next step with payroll, HR, and tax compliance? This is really for the Crestwood team to help better support you along with the Greenshades team. These responses are not shared, so we just want to know a little bit more about you and your company's needs. So feel free to answer, and then we will look at the responses after the webinar. Let's see. Give everyone a few minutes to respond. Okay, so it looks like we have a few responses. Maybe wait just a little longer and we'll give everyone a chance to respond. Okay, it looks like everyone has responded. So I will go ahead and close that poll. So we're good to go, Jody.
So I'm not going to go into a lot of detail with these, but we are going to send out a recap for y'all. And so we are going to include some links in here with additional resources to kind of help you out. Things like links to, the actual bills, links to some of the alerts, so that when the IRS does put these guidances out, that you are aware of them and that you're keeping up to date.
Alrighty. And then as we wrap up today, I just want to leave you with this. Whether you're a GP user or a Business Central user, our goal is to make sure that you have the year-end support you need. So if you find yourself in that somewhat confident category, but not quite worried, also not fully sure everything is covered, please don't hesitate to reach out to your Crestwood CSM. They can loop in Jody and the Greenshades team to ensure everything is in place to close out your year end with confidence. Jody, before we close out, we did have a Q&A question. Let me pull that back up. We had a question. So, what determines qualified overtime? If you do know the answer, or if we maybe need to get back to this question, but that was the question. What determines qualified overtime?
Yeah, it's going to be that additional, my understanding, and like I said, they're going to put further guidances out, but my understanding is that it's going to be the half of the time and a half is what's going to be considered. So that would be what they'll be taking into consideration relative to taxes.
Perfect. Okay. So that was our only Q&A question. And then it looks like everyone filled out the polls. Yeah, but like I said, if you guys need any additional support, don't hesitate to reach out to your CSM. And Jody, anything before we wrap up and hop off?
No, just thank you so much. I hope that you're leaving here with some nuggets of information that will help you and help you through Q4 and year end. I know it can be a stressful event.
Yes, of course. Alrighty, well, everyone have a great rest of your day and don't hesitate to reach out. Thank you.